So, Mark, put us out of our misery. Tell us what is going on with the GBP versus USD and what the outlook is.
Okay, will do. Thanks again, Richard. So this week, the dollar begins in familiar territory, sitting near its recent low, even after some positive economic news here in the States. Durable goods, GDP, initial jobless claims, personal consumption expenditures, and personal income were all better than expected. But despite this, the dollar couldn't sustain a rally last week. So furthermore, the 10-year yield ended the week at 1.58%, well below the week's high. And while each of these economic indicators suggest inflation, the market is not reacting to them. So the concept of transitory inflation, meaning the reopening of the economy and its pressure on commodities, etc., it will subside over the next quarter or two. This is the underlying premise of the Federal Reserve Bank's decision to keep rates low, not to taper at any time soon. The shortened week ahead, recording this immediately after Memorial Day, for those watching, includes ISM manufacturing, construction spending, and ending the week with the employment report. And estimates are for an increase of 621,000 non-farm jobs and a rate of 5.9%. And this report will be particularly important after last month's disappointing growth of only 266,000. So where are we with the exchange rate? The pound is creeping back above the 142 level, although looking at it now, it's down in the 150, 150. And it hit 142.18 on the last day of May after falling to 1.4091 in the previous session. And today, as I mentioned, June 1st, we had a high of 142.50. So what's propelling the pound, or what was propelling the pound? Frankly, as we browse the data and look for reasons that support this move, there's nothing specific other than the commentary by one of the Bank of England's Monetary Policy Committee members on Thursday last week, May 27. They made the following statements from a lecture they were giving at the University of Bath. Medium-term outlook consistent with UK-US inflation targets, no signs of increases in perceived tail risks of higher inflation. Once furlough schemes end, they'll have a better idea of the slack in the economy, and very rapid growth and pickup inflation due this year as the economy recovers. They're saying that wouldn't last, but modest tightening of monetary inflation over the medium term. And this last point could be what's pushing the pound higher. 142.33 was the high on May 20th. And this level, the reason why we mentioned May 20th, this level, along with the Feb 21st high of 1.4241 will be the key resistance for the pound. And a close above these would then target 1.4320. So going back to the last bullet point I just read, this coincides with the OECD's comment that the UK economy will grow even faster than expected this year and next, but it's nonetheless expected to suffer the most long-term economic damage of any of the 7 major industrialized nations.
Okay. Well, we've been doing this for nearly a year now, if you can believe that. And you've been heralding a stronger pound / and or weaker dollar. Is that still the prognosis here?
Yeah, it is. The pound will continue to move higher against the dollar. At least that's our interpretation of the market. But it's the speed of the move that's difficult to gauge at this time, because there are positive economic numbers in the UK, but also they're still dealing with the Indian COVID variant, which has witnessed cases that have doubled in the past week alone. 75% of new cases, though, are related to the Indian variant. So I'll say 75% of all cases are related to the Indian variant. Although of the 5,600 kind of cases pulled out, if you will, 60% of the infected had no vaccine and only 3% were fully vaccinated. So some could argue that that is maybe positive news as far as COVID's concerned. But Twickenham Rugby Stadium, the largest vaccine centre in the UK, opened up jabs this past weekend for anyone over the age of 18, which defied the government's guidance of over 30s only. And the UK is now 40 million people with the vaccination. of which almost 26 million have had both shots, which is pretty good going for a population of 67 million. But getting back to the FX rate, however, we're continuing to look for 144, 145 against the dollar by year end.
Okay, good. But it sounds like it's more to do with a strengthening pound as opposed to a weakening dollar, though.
Correct. Yeah, that's the way that we would look at that right here, right now. But who knows? By the time this goes out, the world is going to be a very different place.
Yeah, usual caveats apply. Right.
Absolutely.
Yeah. Okay, good man. Right, thank you for that, Mark. Appreciate it. I'll see you in a month, my friend.
See you next month. Take care.
See you, pal. Bye-bye.